welcome everyone. Good morning or good afternoon to you, wherever you are. The world, from that statement, you know, is a big place, and I'm glad that you're all joining us this morning on this forum. The topic we have chosen specifically for the audience today is and should be of interest to the participants who we have restricted to just reinsurers in Africa. Now, basically, as you all know, reinsurance, as with any product, relies very heavily on a supply chain. And if one part of the supply chain is disrupted, it causes disruption to the rest of the supply chain, which then suffers. So what we wanted to do is create a forum on this occasion where we would all discuss, or where you would all discuss as reinsurers and share ideas of the possible disruptive effects of this global pandemic on the forthcoming renewal seasons. We have got a series of very thought-provoking topics which Liz will be sharing with you as she carries on with this session, which I believe is going to last about an hour. So thank you very much for joining and taking time out of your day to join us this morning. And Liz, over to you to start.
The first one of those is really about the economic impact of the pandemic, particularly on the economies outside of Africa, because we've all been in lockdown, and that's had catastrophic impacts on our economy. I mean, the UK figures this week saying a 20% drop in just 1 month. I mean, it's pretty damning. But how do you think that that's going to play out when it comes to the insurance markets in Africa? Are you worried about those economic impacts, and are you thinking that there's going to be a severe impact, or do you think that the insurance markets are in a strong enough position to ride this? Corneille, perhaps I can bring you in here on this one first, because I know you and I have been talking about some of this previously, so it'd be nice to, if you wouldn't mind, starting the conversation going.
We can only theorize on what will happen, because, as you know, economic statistics in our part of the world are not up to date, and we receive and we access them with a certain delay. But we can imagine what it is when the entire world and trade is suspended. So there are some publications in some countries. I think that the situation is very very difficult, and in terms of the contraction, the size of the contraction, for the moment, unfortunately, we rely on what has been published by the IMF, which is more relevant. So we have different scenarios, and depending on which countries. So we have 3 types of countries. We have the oil producers, and we have the low income countries, and we have South Africa alone, and North Africa. So I think the most hit for the moment is South Africa, which despite a huge stimulus, it's going to be in the range of 10% contraction. That is outlook for the year. I don't know exactly what it is for the month of May or April, but that's a projection for the entire year. And those projections are taking into account some scenarios of the recovery. The recovery, as you know, no one knows the recovery, how it will be. It it will be a sharp recovery or if it will be an anemic recovery going into 2021. So in any case, I think it is really the biggest shock which has happened to our countries in the recent history. Thank you very much.
I think the shock will also be in North Africa. Maybe to a country like Morocco, the crisis has conducted to partly a recession, but also in certain instances, the industry has been pretty quickly turned into producing masks, producing products that were answering to the pandemic situation. So yes, there will be a shock, definitely. I think, and the story is not finished. It's very difficult to plan how much it's going to be. But yeah, North Africa will be affected like everywhere in the world. And North Africa is heavily dependent on tourism, for instance, in Tunisia and Morocco. And that is the first, probably the instant shock. Nobody is visiting anymore these nice places in these two countries. And finally, you still have some of the North African countries where the curve of contamination is not at all controlled yet. And you have some of the North African countries where I would say the pandemic is just starting, unfortunately, and things are getting worse every day. Thinking about Egypt, for example. So yeah, the shock will be very high, and I think it's very difficult to quantify it, but definitely we are there.
Jeff, can I bring you in from East Africa? You know, are you obviously hospitality, tourism, very key to the East African markets. What's your view of how much of a shock, economic shock, it's going to be, and how that might impact the local insurance markets?
Yeah, thanks, Liz. In the East African market, I think we have seen that the focus for governments now is they've reallocated budgets in Kenya towards fighting the pandemic. We've seen that in Uganda, we've seen that in Kenya, we've seen that in Tanzania, and that budget reallocations have increased in non-performing loans. Kenya, which is the biggest economy in East and Central Africa, we've seen an upsurge in non-performing loans. It obviously that has got implications on in the economy. We have seen that the investment returns have been coming down. Obviously now, the Kenya insurance market for the past 4 years have been producing negative returns. The loss ratios have been increasing. So instead, we have seen a pressure on rates, but competition remains stiff. So in the long run, I think the impact from the international market, we have seen that reinsurance security ratings are coming under pressure, and I think there will be a shortage in capacity for retro that will push rates up. The shortage of capital will obviously affect some of our markets because we rely very much on the retro. So yeah, that's what I see.
Lawrence, can I bring you in next on this one, and also, you know, just to ask how much of an impact COVID has actually had on the insurance markets in terms of claims? Are you seeing now, a couple of months down the line, are you beginning to see any COVID-related claims?
Thanks, Liz, and thanks, Udai and Vinita and Ryan for hosting this forum. In terms of the actual impact on our markets, it's not been primarily on the claim side. I think as they are saying, I think this is really the first major event where you are seeing the impact on both sides of the balance sheet, the asset side and on the liability side. For us in Africa, what I am seeing, the immediate impact has been on the asset side. I think we saw a tanking in interest rates. We saw a collapse in the major capital markets like Nairobi, Lagos, record losses in terms of equity valuations. I think that's been, those unrealized losses, that's been the greatest immediate impact on our operations as insurers and reinsurers. And in fact, there's significant pressure in certain markets on solvency for certain entities, and also regulators have had to come in and defer in certain instances recapitalization plans that had been put in place. Nigeria, for instance, and also Kenya, I think there's been a deferment of recapitalization measures. On the claims side, we have seen claims activity on the life business, but not significant. I think we haven't seen significant activity on the life side. There would be, we're not a major player there. I believe there would be a significant impact on those who do health and medical type insurance. What we have seen is also attempts, and primarily from certain markets where we are not that exposed, at litigation or threats of litigation for, what do you call it, business interruption claims, but nothing significant has come through. My view is the greatest impact now that we are going to see going forward is on revenues. I'll give an example. A market like Nigeria, we are anticipating a 50% drop in oil revenue for the country, and that's a devastating blow for a country like Nigeria. And I think this is the same blow that the impact is going to be the same for all oil producing and exporting countries. And in all those countries, oil is the fulcrum around which, that's really holding up the rest of the economy. So it impacts all other sectors, that kind of significant drop in oil revenues. And for a country like Nigeria, government is a major buyer of insurance. And what you are going to see, obviously, is reduced capacity by governments or other government-related entities in terms of, purchase of insurance. We are also seeing a fairly significant impact from COVID on cash flows. And I think all reinsurers around in this meeting will tell you that that there's no liquidity. Funds have basically dried up. We are not getting paid. And I believe as we get into the third quarter, it's going to get a lot worse. And I think it's primarily due to the fact that, certain key sectors have not been trading. Certain key sectors have been disrupted completely due to, the COVID scenario. Mining, as we mentioned, oil, we mentioned the hospitality sector, manufacturing sector. I was looking on the news today at a manufacturer from Zambia who's talking about, 80% of their inputs are imported, and value chains, and it's primarily from China, obviously, and value chains have been disrupted completely. So more and more what we are going to see going forward is really all those, related sectors, failing in terms of, their obligations to insurance companies. And I think insurance, as you would all appreciate, being in this market, a grudge purchase in the main, is probably the first item that's off the shopping list for most players. Or in terms of corporates, when there is a liquidity crunch, I think one of the items that they're going to defer payment on is insurance. So for me, those are the key issues that we are looking at, economic, liquidity, asset side, but on the claim side, fairly limited. Thank you, Liz.
If I could bring Youssef in. Youssef, in Ghana, I understand that the insurance market has been asking the regulator to delay capitalization plans there. And I'm wondering if that's been driven by some of these factors that Lawrence has been discussing, or whether that's just been a more practical thing that you don't have the capacity to sort it out at the moment.
Thank you very much, Liz. Indeed, it's true that the insurance community, the insurance companies, have requested of the regulator to delay the implementation of the new minimum capital requirements. And we look forward to a positive response from the regulator. This has come about because Ghana is not an exception to what is happening all over the world. Government has already revised down its projected GDP growth from 6.8% to 2.6%. And already government has also made available some amount of stimulus package to support small to medium scale enterprises. And just like where Lawrence left off, indeed, the insurance market is already had a hit. I can say that cedants in the country, in this market, are already losing between 30 to 40% of their initial budgeted incomes for the year. If you had a budget already approved before January, I'm saying that by the end of the quarter to this, from the end of last quarter to this second quarter, companies are revising their notes. Indeed, GNRE, for myself, I've had the board caused me to do a revised budget informed by the COVID impact on the company. And so I will say that I'm not surprised Kenya has taken after Nigeria's cue by postponing or delaying the implementation of the new capital requirement. Ghana has officially, the GIA has written to the National Insurance Commission, and I want to believe that they also follow the same course of action. So it's not any different, but it's rather we are all in the same direction and having the same effect.
Souvik, you've had your hand up for a little while. Can I bring you in now to make a comment?
Yeah, thank you very much, Liz. And just to supplement what Lawrence has already mentioned on your question about claims, we have seen a few instances where clients have been claiming for denial of access under business interruption without a corresponding physical damage. So now this is a bit of a wake-up call for us, and I see these claims coming in from Mauritius and from Egypt. So in an all risks policy, we have had instances where denial of access is an automatic inclusion. And I think going forward, we need to be very careful in examining how this works and how we safeguard against these going forward.
Youssef, I see that you also would like to come in, so perhaps we can bring you in at this stage. And then I'd like to move the question on after that, if we could, please.
Thank you. So what I want to say for all the African reinsurer player, that it's very important to dedicate a committee in order to evaluate the impact for COVID. But you need to know exactly all the sleep, all the wording and the impact, because we will see the impact probably not for the 6 months, but later. And what happened for some market, I have some discussion with the CEO for insurer company here in Morocco, but I am sure it's the same case for other countries, that the direct broker, because you have a very strong impact for the direct broker, so the collection of the premium will be a serious problem. So the cash, okay, the insurer, the cedant, will not have the appropriate cash, and you have this disruption of the collection of premium. So this is the first point. So if you have some quota share, or if you have other treaty, you will be, of course, an impact. For the financial markets, you know that a lot of countries don't have rules for Solvency II. So here in Morocco, you have an impact for the stock markets less than 20%. So we see we are now have some case, but of course we have an impact. Okay, so we consume all our value on this for the stock market, and for the claims, for the quota share claims, it's sure that it's we will have a very good and appropriate loss ratio comparing for the last year, okay, and for reinsurer who have this type of treaty, it's an opportunity, but it's sure that a fraud, okay, we can expect increase for the fraud, okay, and it's sure for the additional, okay, we will have some kind of suspect fraud. So we don't know if how we can deal with this situation, but we need to include in this for this figure. The other point is for the investment. The investment for it's sure that for the country who is more connected with oil and mining, we will have a serious impact. But here for the Maghreb, of course, the states want to launch a lot of projects to the states, but we need a time, okay, between the decision and after we will have a contact.
Udai, I know that you've been waiting to make a comment, so perhaps I can bring you in quickly and then we can turn on to some of the other issues. Udai.
Thank you, Liz. Thank you. Basically, the comment I want to make, which some of you may totally disagree with, but it's a thought that just popped in my head following the very valid comment made by Jeff on this event having pressure on security ratings of companies, and the comment made by Lawrence on how it's impacted the asset side of companies with share prices falling in various bourses in Africa. The comment I really want to make is, are we now looking at a major structural change in the markets in Africa, insurance markets in Africa, say in the horizon of the next 12 months through acquisitions and mergers? Is that what we are looking at? And is our client base now looking to change? Are we going to look at different client base altogether? That's my comment.
I don't know if anybody would like to come in and react to that. Corneille, do you foresee a time in when you might have more mergers and acquisitions? And I'm particularly interested in that whole rating agencies issue, because I think Fitch came out this week, didn't they, and said that they've downgraded, I think, 7 of the sovereigns, which obviously then ultimately will impact the insurance markets. So are you seeing this as an opportunity for wholesale change?
Thank you very much. So I think on the impact on the rating, yes, there will be some movement, especially for those companies who are already having some issues and some warnings. The example one has in mind is Swiss Re, which already had 3 years cumulative years of negative underwriting margin. What I was saying is that some companies were already showing some weaknesses in their underwriting portfolio. And if you add this year plus what one of us has mentioned about the impact on the asset side, so it's clear that they have been downgraded, and but I don't expect really a big impact on companies who were already good. One example is our case in this month of May. Our rating with Standard & Poor's has been maintained, as they found that the impact of COVID will not really our claims experience will not worsen. So it will depend case by case, and I think European and London-based companies, which were already having a very difficult 3 years in terms of performance, are to be worried, and let's say maybe 40% of companies will be downgraded towards the end of the year, and some have started to prevent it by raising capital on the stock market. So that is what I see. I don't see it in Africa in a bigger way. As you know, Africa will not be impacted similarly to Europe, except South Africa, which will have a hit of maybe 6% contraction, Nigeria 3% contraction, but companies were generally strong on the capital side. So for this year, I think we can maintain our ratings. Those who are rated by AM Best, I think AM Best says that the outlook is stable. They don't see a big impact on the continent of Africa on the claim side. So top line is something which is really a puzzle. We don't know exactly what will be the end of this year in top line, plus the liquidity side.
I think I just wanted to comment regards, the question raised by Udai there in terms of structural changes in the market. My view really is that we were already seeing significant pressure and that's on the primary insurance side. In all instances, in all the major markets where regulators have called for recapitalizations, companies, particularly the smaller ones, they've all been struggling to meet up with the new minimum capital requirements. My view is the days of fragmented markets are gone. The primary driver and the attraction of capital in the insurance in Africa has been the very attractive, technical margins. The business has been generally profitable on the underwriting side. That has gradually come off. Over the last 5-6 years, we have seen significant reduction in margins on the technical side. And most of our markets, most of the smaller companies have been subsisting on investment returns. And for you to get decent investment returns, one, you must have the liquidity. And number two, you must have capital markets that are flourishing, and you must have high interest rates. All those factors are gone. And my view is we will either see failures going forward, particularly the smaller players, or we must see I think, significant consolidations. And we do have certain groups on the continent that have the appetite to acquire the smaller players. My view is we are moving in a direction where conditions are such that smaller players cannot survive. Even in this COVID environment, we've got small players who didn't even have a digital strategy. They didn't have the capacity or capabilities to work remotely. It just tells you the extent to which they are, weak. My view is these small players will struggle going forward, particularly on the primary insurance side. Thank you.
My comment is really on what Udai said. I think reinsurance is derived demand. And obviously, if the pandemic continues and there's no slowdown in terms of the economy is coming back to normal, I see that there could be consolidations in the markets. Why? Because in most of our key markets, the double down markets, Kenya, Uganda, Tanzania, Zambia, a lot of the projects which were done by the Chinese are currently put on hold, and that's a loss of income. We also see that the regulators in Kenya, in Uganda, have pushed for premium holidays. We are not talking about current premiums, but we are talking about long outstanding premiums. And obviously that is going to put pressure on insurance companies' liquidity. So if this continues for the next 6 months, I see some of the weaker companies looking for capital elsewhere. And the only way to sustain themselves is to bring in new partners. The hotel and tourism sector, we've seen a significant decline in revenues. Most of the hotels in Nairobi have been closed. I'm sure you've seen that. You can talk of the Crown Plaza, it has been closed for the past 3 months. People have been staying on leave without pay. Obviously, that has put pressure on the life and the medical business, and we've already seen a decline in revenues in those sectors. So, motor is the biggest class. We have seen a number of our clients moving from comprehensive insurance to fire, trade, party theft. So it's putting a dent on those revenues, meaning that really companies might find themselves in solving problems. Thank you.
But whilst everybody thinks about that and perhaps comes up with some comments on that, Clement, can I bring you in? And obviously Ghana's been in a slightly different position because you have come out of lockdown quite quickly. So perhaps you don't have the same issues that some of the other countries are suffering with. Would you like to come in and make some comments, and then maybe we can come back to exactly what Vinita was talking about?
Well, I think we do have the same challenges, even though we had our lockdown lifted earlier on. We do have the same challenges just like other countries are having. I think in times like this, one would presume that there are the theory of advantages in disadvantages comes the fall. I mean, what could one make out of all these in terms of the challenges? I would want to focus on the equity side. Like Joseph said, regulators are being talked to so as to see how best they can sort of extend the capital increase position. But then private equity companies, I think around this time, will want to observe for a while and then see the performance before they advise their clients as to whether they should invest in some of the companies or not. So in that regard, I see more of mergers coming into play rather than acquisitions, because of course there wouldn't even be much of excess funds. One other issue that I would want to also inquire is with the coming effect of IFRS 17, how is this pandemic going to impact the IFRS 17 in relation to insurance contracts?
The situation in Southern Africa would best be described as different from one country to another. you will find in terms of the impact of COVID-19, South Africa is by far the highest statistics, both in terms of infections as well as deaths. In terms of the economic impact, again, it varies from one country to another. So I'll probably zero in on the experience from Zimbabwe, where I'm closer, and I'll probably be able to just comment in terms of both government reaction, the impact on the economy, and also the extended impact on the insurance sector. First, the issue of lockdowns. Again, we saw this across the rest of the Southern African continent, and the attempt by the government to raise funding for COVID-19, especially the purchase of PPEs from the private sector through government bonds. Again, the impact of the financial markets, basically it has been a mopping of the liquidity from the financial markets. We have seen also the issue to do with additional budgets coming up, fund the activities around COVID-19. And basically what that has done also is to strain the fiscus, especially when you look at the taxation for most of these economies, Zimbabwe in particular. So when you look at the actual impact on the insurance industry in Zimbabwe, we have got a COVID bond that came from government, and the sanctions thereon basically meant much reduced liquidity in it. And at the same time, you have heard from other markets, which is the same experience here in Zimbabwe, regarding slowed movement of premium. So credit control has been a significant challenge. But again, we've got other macroeconomic challenges, which basically have had their own impact on the performance of the economy. So if you put together with the impact of COVID, you then get business, the industry at large, that's the manufacturing industry, that is basically struggling in its own core businesses. That impact then again reflects on the performance of the insurance sector in terms of the take-up of insurance and basically the remittances, as I mentioned earlier on. But again, when you look at lockdowns, you then have got other challenges. People movement is changed, and basically with constrained people movement, services to the business. You talk of your risk surveys, loss assessments, and the like. It means they slow down in terms of the reports that you will get because the assessments cannot be done on time. So the coming in of claims as well. In a lockdown, you definitely have then a time lag where you don't get the reports on time, where you get the claims reported included on time. But again, overall, when you eventually look at the claims that are advised to you, which are not concluded, you then realize that you probably have a lot that is going into your reserves. So it's the paid element that is small, but the reserved element is growing big on your claims. So basically, this has been the kind of experience that we have had. COVID-linked claims, where we can say the short-term side, claims with a cause being COVID-19. We have not yet those in Zimbabwe. I can't comment about other Southern African countries. I'm sure Jeff or Lawrence here on will be able to comment on that. But in Zimbabwe, we haven't had any COVID-related claims on the short-term side. We are still taking these as early days. In terms of forecasting, we think that the capacity issue that has been discussed earlier on is pretty much because of the weakening currencies and also the challenges that we have with the ability of of other instruments that tend to augment the traditional capacity in our markets. So capacity is constrained, and overall, the business is slow at this moment. Thank you.
Concernant, bon, je voulais parler de façon générale sur l'activité de la zone ciment particulièrement. Nous avons fait une analyse globale avec qu'on appelle notre autorité ciment sur l'impact de Covid dans la zone. Réellement, il est difficile aujourd'hui de donner un impact quantitatif sur l'activité de la zone. Cependant, nous avons remarqué que quelques effets sur les décès au niveau de la vie, qui posent quelques problèmes. Il y a eu quelques réclamations. Ensuite, concernant l'impact sur le bilan qu'on appelle des sociétés d'assurance ou de réassurance, ça c'est tout à fait clair compte tenu du fait que les activités sont au ralenti à cause de, on ne dit pas ici le confinement, mais nous avons eu le couvre-feu, nous avons les mesures barrières qui ont entraîné certaines compagnies à prendre des mesures de réduire l'effectif dans les compagnies et qui jouent effectivement sur les encaissements des compagnies. Et nous-mêmes, nous avons constaté même des difficultés de transfert, des difficultés de virement de fonds à partir de nos banques extérieures. Donc, qui dit difficulté de virement, ça veut dire que même la réception est encore difficile parce que les banques sont devenues de plus en plus délicates parce que les banques demandent beaucoup de justificatifs au niveau des virements reçus ou bien des virements effectués compte tenu de la situation des pays sanctions sur sanctions. Donc, tout ça, ça impacte relativement les activités de la CICA particulièrement. Et ça, je suis convaincu que c'est beaucoup de compagnies aussi qui sont dans la zone. Bon, parallèlement, nous avons quelques cas où on nous parlait des pertes d'exploitation au niveau qu'on appelle des réclamations au niveau de la perte d'exploitation de certaines entreprises. Dans la zone ciment, heureusement, nous n'avons pas de pertes d'exploitation qu'on appelle isolement donné. Les pertes d'exploitation sont données conjointement avec les risques dommages. Donc, il est difficile aujourd'hui que le Covid puisse avoir un impact sur les réclamations des pertes d'exploitation dans nos zones. Au-delà de ça, nous savons bien que forcément, compte tenu du ralentissement des activités, il y aura un impact vraiment sur qu'on appelle les bilans des compagnies d'assurance et de réassurance de la zone. Mais cela ne peut pas être quantifié aujourd'hui. Après le premier semestre, peut-être qu'avec les évaluations, nous pourrons peut-être avoir une bonne idée de la quantification de ces éléments. Je vous remercie.
One of the questions that we wanted to ask was whether, you know, obviously the group around the table this morning are the market leaders on the continent. So are you thinking about how best to manage the pricing for the next renewal? You know, what do you think your customer demands are going to be compared to the last seasons, and how will you manage it? Are you having those conversations? Callisto, what's your view?
I think there will be a pressure on pricing. As we indicate, the international markets, of course, will have restricted capacity. And because of the macroeconomic challenges, a number of enterprises will have challenges in meeting their obligations as in terms of whether insurance is a necessity and whether they would want to get increased prices or to afford insurance. So there will be pressure on pricing, both from the mega players in the reinsurance market and also from the individual. But the situation is still evolving. I know competition currently is cutthroat on pricing, and I see that prevailing towards the better part of the year because I don't see the situation turning around before maybe even next year. So I would see us trying to get the prices to where they should be, but there will be a challenge to get takers for lower prices or even for higher prices. So pricing will still remain a challenge, and competition on pricing is still expected because of limited potential markets or potential clients. But the bigger issue is the liquidity. As much as we'll be talking about the pricing, the ability of the potential markets to pay has been greatly compromised by COVID-19. And as Lawrence has said, the current biggest challenge we are facing is getting premium payments. And I would see a number of companies struggling on the liquidity part of it. So the extent to which we can leverage technical pricing will be compromised to a large extent by the liquidity in the market.
Mine is, okay, I don't want to say it's just a comment. It's a question that has been in my mind, listening to the various comments from the people here. We have the market leaders for the continent all in this forum. I won't use the word all, but many of them, most of the market leaders are here. I know that until now, your asset side of your balance sheets was usually doing quite well. Our returns on investments in Africa are much better than that in the Western world. And so the pricing that was given on the ground to the cedents on the ground was very often driven by the retrocession rates that were coming to you. This year, for the first time, I feel the asset side is now feeling the pressure. There is now you will all feel the pressure from your shareholders also, because you won't be able to rely on your income from the investment side. So will the continental leaders now, I don't want to use the word continental, sorry, the leaders on this continent of ours, are you going to take control of the pricing in advance and set the tone for the rest of the year yourself without waiting for the world giants to start giving their own message? Or are you going to work in a cohesive manner, maybe to try and come to some agreement of how you're going to make things work? I don't know, I'm not talking about a monopoly situation, but I'm just talking about how the reaction is to be expected, as you will have to take control of your own destinies to a much larger extent than you have been until now.
You know, this pandemic has actually affected a lot of, the industry globally, I should say, because we are talking about our job is basically compensation based, and mostly you see these claims coming in, but you keep on getting mails, postponing, deferring payment of premiums. You get premiums, you invest them, and if this is not coming in, I am just making a comment on maybe not having a lot of claims, but the claims that are coming in, if we are not getting these premium payments from our cedants and from our international markets to pay you the premium, because most of these people in the lockdown, the lockdown countries are not able to pay our premiums as well. So now, what is the way forward? We are not getting the premiums to invest. How do we pay claims as they arise? Because a lot of claims are coming in, premiums are not being paid. I think that's my comment. It's a serious issue, and we all have to, maybe pray that this pandemic goes out fast so that we can put, our economies back, because it's affecting everything, especially the service industry. Most of these people come on sometimes canceling the business that you've been on for some time, and they are not even paying the premium. So I'm just asking, what is the way forward? Thank you very much.
Yeah, Sangare talked about the CIMA. I just want to come in to share how the market is reacting with the claims of the COVID in the CIMA region. Actually, most of the markets in the CIMA region have rejected the claims caused by COVID-19 by the fact that these claims are force majeure under Article 1 of Book 1 of the CIMA Code on the insurance contract. And the regulators have responded that it cannot be a force majeure or accidental event, and that it's seen as an external, unforeseeable, and irresistible event which prevents the insurer of the obligation from performing their obligations. So this is what's ongoing now in the CIMA. There's a tussle between the insurance companies and the regulators, but the regulators are insisting that they must be paid.
Yeah, just 2 points. I think everybody agrees that the market will suffer from the asset side, from the cash flow side, from the reduction in activities. That's clear. But there is a particularity, I think, in our world. It's on the claim side. Even if we're going to find there and there a few examples of denial of access or a few requests, globally speaking, we are very safe in terms of pure direct insurance claims, because we haven't sold, I don't know, any product which were related to pandemic or epidemic, which is very different in the international world, where you see huge companies having delivered hundreds of thousands of policies covering epidemic in France, in England, in so many countries, where they're going to have massive losses, which they will have to pay because it's covered, as simple as that. I don't think in Africa we have given that type of cover. I don't think in Africa we have a big market of event cancellation, which protects such events. So this brings me to have a look at the entire world. Today, it is said that the loss coming out of COVID will be in the range of $100 billion. So number one, $100 billion would be the largest loss ever sustained by the international reinsurance and insurance market. Now, this 100 billion is probably something like 50 billion in direct insurance losses and 50 billion in assets losses, something like this. Again, 50 billion is higher than Katrina, is higher than 11th of September. So this brings me to the second point. The international market is probably going to suffer something which is the accumulation of a huge insurance loss, 50 billion, and very difficult economical situation, which is probably the scenario where you can face a real turn into the international market, globally speaking. This is what was expecting. Everybody was saying a big loss is not sufficient. You need a big loss and a big economical crisis at the same time to see the market turning and hardening very much. So my second point is to say, we can expect a serious hardening of the international market in the year or 2 years to come, and probably further. And that will impact our retrocession, because this is one of the first places where we are linked with this international phenomena of hardening. So my first point is positive. We don't have many claims, in fact. But of course, we are a global world, and we are going to suffer from the hardening of the market in any case, as usual.
Yes, on the question you have asked, it's a very good question, which is about our survival, and we have seen that there are some catastrophic scenarios where our economies will not be able to be. The stimulus from the government will not be able to help the economy. So it will be a long recession. And in my view, the pricing already was under pressure before the COVID-19. So if we take our portfolio, which is published, I think. Our annual report is going to come out. So it is a reflection of the entire market of Africa in a way, in terms of diversification. You will see that the combined ratio was under pressure. So it is already moving towards 100%. Okay, so and there is no sign of improvement before COVID. So we can say that our financial statement of last year were extremely good because of only one thing: investments. So the investment income we had last year was the best ever in the history of Africa. But in terms of underwriting performance, it was one of the worst ever. So now we are going in a year where there is no investment income. Rather, there will be even a loss. So what are we going to do? I think that we are going to push the rates, and there's no question about that. I think in Africa Re teams, we know that each treaty, each facultative will be looked at its own merit based on the past.
As reinsurers, I want us to spend a little time of this meeting to look at the impact of pricing for the covers that we are going to look at in a couple of months' time. There are two scenarios. If you have a client whose portfolio is shrouded with claims, I mean, has lots of claims, definitely this cedant or insurer will have to bear the brunt of increased prices and possibly even limited market for his or her portfolio. But when you have a situation where the client has a normal portfolio, which is not, besieged with lots of claims, then I think we as reinsurers, we should position ourselves to have a more welcoming and accommodating atmosphere to have these clients and treaties renewed and considered. Because in Africa, what we may lose out is if the big clients, i.e. the European reinsurers, stand their ground that they are increasing prices because of COVID, then for Africa, we should look at an opportunity, a strategy to support ourselves, because if they crank it and they say that they're going to increase prices, COVID has affected everybody. It's not a case where a client has suffered a loss and for that matter will have to suffer the penalty of increased rates and stuff. So I want to probably set a tone that we African reinsurers start thinking about how we will create capacity for our own business, because it is an opportunity for us to grow this business and probably even catch up with our European partners who otherwise will be looking for an opportunity to harden prices, harden the markets for us.
My comment really was to Corneille's comment on the pressure on rates, that I think we have seen moves by the regulators in Uganda, in Tanzania to implement minimum rates. And it's an issue which I think as we price the treaties of proceeding companies, encourage them to review rates, because otherwise the sustainability of the industry is seriously under threat. So you find that there's too much competition in most of the Southern African markets, in Zambia, in Mozambique. So it's an issue that as reinsurers, we need to look at this objectively, because definitely the cost of our retro programs next year are going to go up.
We can look on the bright side. I think, yes, I agree that like also my group MD has already mentioned, we've already been seeing pressure on our results. The issue of pricing for our own treaties and all that, I think definitely we have to take measures. I think like for the East African experience, I think we've been trying consistently, I think, just to have these kind of discussions where we see where the industry is going. And it's definitely, it hasn't been good. And COVID really has exposed the weaknesses we had within our markets. And I think one of the positive things that is coming out of this is that some of the insurance companies have used this time to relook at their internal processes, and they are realizing that they really need to do a lot of things right. And one of the things we've noticed, those who have really been digging deep during this period, is to review, for example, the data we get on claims. Most of the cases, I think like AfroAsia, you must have noticed that most of them are digging all through, because we are talking about issues of liquidity, we are talking about issues of liabilities and assets. So they are digging deep to see all the outstandings where they have, and they have been really quite aggressive. And right now, where we didn't have information, it's coming out. And I think by the time we go into renewals, at least I think we'll be having quite a good picture on the exposures that most of the insurance companies, because of internal inefficiencies, they are not even declaring. But right now it's coming out, and it will even give us a chance really to price appropriately. And I think when the numbers are quite there, then it's much easy to. So the biggest weakness is where it's had is that data, the quality of data we get, especially on claims, outstandings, and reservings. And I think this time around, most of the companies, because they are under pressure, also to improve on their liquidity, they are bringing them out. And also it is also giving us an opportunity to those who are not paying their balances, also to make sure that we look at these balances. The issue of outstanding balances is matched with also these internal cleanups that is going on right now. And on the claim side, what we are seeing also is that during this period, anyway, the lockdowns, like for East Africa, I think have been around for 3 months now. And in discussions with most of the insurance companies, the direct market, they say that the claims ratios have been at the lowest ever. So that is the other upside on this COVID. Like even on the health, which is always known for having very high loss ratios, I think most people are not even going to hospital these days. So in this interim period, you see that kind of the loss ratios really kind of subsidizing. Even the motor is the same because the movements on the roads have reduced. And also the other intervening factor I think that has been there is that most of the businesses are they are financed by banks and other financial institutions. So cancellation of policies hasn't been able to be on a wide scale because the assets are still secured with the financial institutions and they are obliged to keep the insurances. Definitely, on the other hand, there will definitely be premium holidays that which could put a little bit squeeze on the cash flow and the liquidity. But the insurance policies for those who have secured assets are not being cancelled. They are staying in place. Maybe hotels or hospitality industries have been affected. Those which have closed, definitely, they are either asking for silent risk covers, rates, and all this. So, like it's already been said, it's an evolving situation. We are all monitoring as it goes. I think, and also having discussion with most of the direct companies in the region, the impact on their top lines is between 10 to 5% drops within budgets, not even, but compared to last year, they haven't yet experienced a very big drop. But we know that maybe going into second half of the year, the situation will be quite different. So, but on the renewals, yeah, we have to tighten terms. I think we've been having engagements to see how best as reinsurers we can remain, we can be in a sustainable business. And I think we'll have interesting engagements with AfroAsian when it comes to renewals. I think the one right now going on is for Ethiopia. I think it's a 1st July renewal. So it will be the first test to see how the reinsurance in Africa are going to behave and how they are going to handle the pricing and all that. So that's what I could comment for now.
Just 2 small comments. And the first is to thank Africa Re for confirming that they will support everybody else on technical pricing. That's a fantastic news. Unless they do it, the rest of the team cannot do it. Secondly, on life insurance, and this is an area where I see a lot of fall coming in, especially since it's the governments which purchases, or the government organizations like the parastatals which purchase a lot of life insurance covers. And we find that in Kenya, at least, there has been a significant slowdown in these purchases. And that is causing some headaches, which we don't know when it will be resolved. It seems that the parastatals are not taking up or renewing the life insurances in time because of lack of funds. So this is an area which is of concern to all of us.
Yes, the comment I wanted to make was following on from the one made by Youssef about the reinsurers in Africa coming together and effectively acting as a buffer to the hardening rates expected from the non-African reinsurers who are probably suffering at the moment. The only comment I want to make on that point is that this is still a supply chain. Even for capacity, unless, and I think there's been perennial discussions on this, unless the reinsurers in Africa substantially increase or boost their capital, you will keep relying on external retrocessioners to give you that off-balance sheet capacity that you need to write the volume of business that you are writing. So maybe that is something to be discussed at a future forum, and probably it requires several discussions. But we are all linked one to the other. And if we want to take or create our own destinies, we have to probably redraw the map a little bit when it comes to capacity building in Africa. So thank you, everyone. Thank you for joining us today. Just to bring this session to a close, the comment I would like to, not the comment, but the summation I would like to give is that when this pandemic started, before that, we were all running our businesses very happily. We had a clear vision of where we were all going, where our companies were all going. Suddenly, this pandemic effectively, if I can draw an analogy or create a picture, paint a picture, created a chasm, a huge instant chasm, which is now filled with fast-flowing water. We have to go from one end of the chasm to the other, and the speed and direction at which we guide ourselves to the other side, which everyone is either calling the next normal or the new normal, will depend on how robustly, as far as this panel is concerned, how robustly the reinsurers team up together and start following through in a focused manner, starting probably, as my friend Kiiza mentioned, at the starting with the next renewal season, which is Ethiopia, and probably following on to the major renewal season of January 1st in the rest of Africa. So I'm happy that all of you could join us, and I'm happy that you all shared your views, points of views, which others have taken away. And all I can say is that we will probably regroup in a few months again, maybe in the new year, to see exactly how what we have all shared on this forum is enacted in reality in the businesses that we have written or you have written. So thank you very much. Thank you for joining us, and please stay safe, and I wish you well.